Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Wednesday, December the 18th, 2024. I have a lot to unpack, so I'm just going to jump right in. You're going to automatically see that I've now encased the previous fourth wave of one lesser degree in yellow, which also suggests you're going to notice that I have filled in that the high from yesterday, actually Monday, the high on Monday at 22,450, in my view, has now completed all the way up to that intermediate wave 3. Now, go a little bit into the background. What really was going on today? What really shifted and it suddenly became really bearish? And it truly, if you got to look at it just a little bit differently. So just stick with me for a few minutes here while I really try to unpack what took place. And it all truly, honestly revolves around the capital flows in and out of options. And because there are options on all of these different, the indexes, the individual component stocks, then there are ETFs, there are single member ETFs, single stock ETFs, there are trading product after trading product after trading product that has options trading with it, which then brings gamma, brings vega into the market, brings theta into the market. And these are just calculations that are then placed into the models that are going to start spitting out where danger levels sit. And right at this moment coming in, I've been talking about how inside the options that the market has been very, very call heavy in terms of where is all of this gamma, where is all of this money sitting in premium positions in calls up and down the line. And what I mean by up and down from the SPX to the S to the ES to the spiders to the NDX to the NQ to the triple Qs, heavy duty triple Qs, heavy doodle spiders. But SPX, big daddy of them all, sat at one point, and I saw the other day that the total nominal value of it was $1.25 trillion. That was what's going to expire on Friday. With all of that sitting there, it didn't take much to crack the egg and for it to just open and run. And we saw that today. And it wasn't that the market got what is expected in terms of an interest rate cut. We got a 25 basis point interest rate cut. That's what they were looking for. But then here came the kicker. And the kicker was now really pushed out as a headline that Fed will cut back on the amount that they're going to be cutting rates in 2025. Now, what did that really end up doing? Yep, that was news. Yep, that was something to sell, and they did start to sell. But when the market, particularly the S&P, but here in the NASDAQ, since that's where I'm starting, that level was 22,200 right here. Actually, 22,220. And once that got broken, we started to slide. And it took very little time to get down 100 points to 22,120. That snapped. And then all hell broke loose until we got to the next level in terms of where gamma sat. Whether it's via puts, whether it's via calls, it's gamma. And it got affected because it went through the next level, which is around 21,620, I'm going to call it. And then it just kept on going. Now, we got to wait to get the numbers in terms of how much of this gamma has been released in terms of, because positions are closed, position got hedged, positions got moved. So what actually comes off on Friday? But I don't think that they're going to be able to, or have been able to, unwind, because we started at 2 p.m. So in 2 hours, this is when all of this horrendous downside really kicked in. So I don't think in 2 hours you can dump that much gamma back out into the market. You're going to have to readjust it. You're going to have to make your adjustments, et cetera. But I think we have additional adjusting to do. And we're going to have to work it accordingly to the numbers. Now, all of what I've been talking about and leads up to this moment, because now we're going to have to be working what I'm perceiving is going to be, it's a downside count. And so just I will go over it in a big picture update over the weekend, but safe to say that what I've been looking for is that intermediate fourth wave and to come down into this area. Well, look at that. We're already in that area. This is the area of the fourth wave of one lesser degree. We're into it today. Beginning, because of what Elliott taught us, it shows us, is that most often it's going to come towards the lower end, the terminus, the end point of the fourth wave of one lesser degree. And in that case, we're talking about in the NQ, we're talking about 17,890, 17,900 up in that area. And this is now basis the March contract. So we can trade this all the way till next March to really kind of get what this move is going to do, because we can stick to that number without having to make adjustments because of the contract roll. Now, having said that, I'm going to bring this down. Let's look at the 4 hours. So what I did, this all remains the same, 1, 2, 3, 4. And then this was the 5. And I just, instead of leaving this 3 and looking for a 4, however I had it, I just flipped it down 1, as I said I may have to do. And I think I did actually here in this, and would just push this one, that minuet 5, like done, and then cleaned it up above. And again, because of the depth that that first push did. Had we had more time in the trading day, it's, we would still be likely dropping, because they need to unwind all of this. If the stocks can freely trade, if all of these things, because that's really the combination here. What we may see coming in is just having to adjust positions more and not wanting to rest overnight with a lot of exposure. So we may see that. But again, the stocks are trading now, and they'll continue to trade for a little while longer, but then they stop and then they restart once Europe opens. So again, there's a whole period of time where anything in the future is just really whatever, but there's nothing to truly base it on, because the stocks won't be trading. All right, so where could we possibly be? Let me bring it down to the hourly chart. I'm believing 1, 2, 1, 2, and this is all a 3, a 4 and a 5, and that's a 3, and then a 4 and a 5 down, that's a 3, and then a 4 and a 5 to finish the first leg down. So again, remember I said, although I thought, thinking that it could be this intermediate degree 4 will go fast. What if we get down here by the end of the year? I know. Friday's the 20th. And then we have the Christmas holiday. So I'm just saying, what if? But I'm not saying that that's what will happen. But I think we could do a fair piece on the daily. I think we could do a fair piece. We broke today. We broke the 8. We broke the 20. Both turned lower. And this is going flat. It's going to provide support at 21,196 in the futures market. But I think if it's broken, that's the next target, 20,178. And again, going back out to the wide picture here. Let me go out here. We're looking for here, but we can get all the way down to 20,000 ish. And that, sure, we wiped off a lot today. There were points where this market was, the cash NASDAQ closed down 791, almost 800 points. I believe at one point it was down more than 800 points. You know, the Dow closes down over 1,000. So again, these are big numbers. This is a big thing, but this is how pumped up things got. When you get that much gamma, when you get that much unwinding needing to be done via options, which are tied to the stock, which are tied to the index, you can see the flow. You see the flow, right? What are we following? Capital flow in and out and somewhere else. And that's what's happening. And it provides a lot of trading. Now, again, I'm going to be paying attention to where the new levels are going to be. You know, things will shift around but that may only last again because we flipped to risk off and it jumped in full force. It wasn't like we're just kind of going to dawdle around and go flying back up. Now, what could come in tomorrow? They all changed their minds and figured it wasn't as bad as we all thought. And I'm not sure what I would think of it. I'm coming down here. I mean, it goes here. I mean, that was just straight ass down. Boom. I can come down to the 15-minute chart. Do we really? One, which really at the end of the day, 3:45, we had a little runner. And then the market closed and they took it down to new lows. And now they kind of just going to sit sideways. So it's very interesting. We haven't really had any bounces except that one. And I think it was just what was sitting there to go market on close type orders. So NASDAQ, we got to play the bounces. I think if I were looking from here and was thinking we could get some bounces, you're going to start to run fibs. And you're going to have bounces that are going to look pretty big because look how far down we are. And on an hourly chart, wow, that's the moving averages. Yes, it's going straight down, but you can see how fast the market was going versus how quick the moving average had to catch up. And it isn't. Market closed at 21,459 or 20,450, and this thing is sitting up at 21,930. So they got to catch up. Maybe the market comes up, but this is going to come down. And I think it could be both. And depends. If it stays as tense as it is, then these are just going to turn and tumble. This is the hourly. Coming up to the daily, they broke. And the breaking of the 50. That I think that because again, folks, because of these numbers, these levels, it's like, no, I don't want to be buying at 21,196. This level didn't exist until like a couple of weeks ago, a month ago. So we tacked on almost 1,500 points, $1,500 in a very short period of time. You're going to be hard pressed to find buyers, right? That because you did buy it, now you're looking to get out of it. It's like nobody else wants it. So you end up just kind of selling into something and can just really get nasty, but it did today. So bounces notwithstanding, I am looking for additional downside. If I had to start throwing on some fibs to give me any type of support, you can see I got to go from the hourly to bring it out to the 4-hour and start pulling it in here to here. That'll give you that's where sometimes algorithms will line up because it's just looking for this move, the possibilities. But if levels break, then you can't get in the way. So in other words, it's like you have to continue to run a little bit larger fibs so that you're always pulling something down that's going to guide you down through here. And that goes two ways. If you're looking to sell, then you want to make sure that you've got enough room to make the money that you're looking to make. Because the market is inside these bars. Even a one lot could go from nothing to plus 400 back to down 100 in seconds. And I kid you not. So We got to play the game. We're going to just have to kind of play what the market is doing. And it's difficult now because we don't, again, have a whole lot of markers within this drop. So we have to come out here, and then we have to try to connect coming down. Okay, over in the S&P. The S&P, I actually marked a small failure. So third wave here, and I was thinking this is a 4, but I thought it was an extended 4, and that ended all today, of course, when it broke 6,113. Now the marker here in the ES was 6,080. So right about there is where the mark 80, 81, when it broke. But you can see, let me take it down to the 15 minutes, see if we can come up right there. Broke, tried to recover, broke hard, broke hard, broke hard, broke very hard. And if we go back and we look, you're likely going to find that there was another gamma level there. So as these broke, it just drove additional adjusting to be put into place. And in this case, as these markets dropped, whoever had these positions, they were getting longer. So times however many. So it really just turned into a free-for-all. And it was a massive day. In fact, the S&P itself, the SPX, was down 178 on the day. And right now, they're trying to determine really what they need to do. And I just think people want to get flat, and it's going to come in at various levels. So we could see some continued volatility, but I'm not really looking for like that. Someone's going to take a stand like, oh, this is all nothing, and just start buying the crap out of this. I don't particularly see that right now. Okay. Let's go out and take a look here. So I updated everything, and this one I need to just fix for 1 second because I'm a stickler or perfectionist, you might want to say. And these are just putting those fibs in the correct color so that they coincide with this. So here as well, 1, 2, 3. Put that third in, as I stated just a moment ago. I did mark it as a small failure. This high is 6,176 or 77, and this high was 6,185. Small failure. And so I left that there, and then this is just 1, 2, 1, 2, and then even another, and it just comes off, and then it just starts to go and go and go. So that needs to, oh yeah, but that's okay because I could put it over there if I wanted to be super accurate because that's the 5. Doesn't change it all that much, but it does. So what am I looking for from here? Let's go out to that 4-hour. And here we have basically the whole thing. That's the weekly. I wanted the 4-hour. There you go. Here it is. And again, that's the range. Previous fourth, 52.72 is 382. That's the most common. We started all this from 6,150. And today we got as low as 5,906 was the low. And so it's quite a little trip. And I think that could just be the initial, right? The true excess. And now more. Because we'll find if we go further out, you can determine points of control off of a daily, points of control off of a weekly. You can put them on there and they'll show up, but then you have to consider that's how taking a lot of time to condense it into where the favored price range was. for that period of time. But right now, we're sinking. We're sinking quick. So again, it I would be totally surprised if we stopped, turned, and they came in and started buying it like there was no tomorrow. Like, I'm not sure what the deal would be, but to reverse everything right now based, because this is more solidly based on what's coming in the future or what's not coming in the future and what that may produce. And so we're back to uncertainty because of the effect that the incoming administration, they're going to institute policy, and what will that policy, how will it affect what sectors or where within the trading market. So I'm still thinking, okay, intermediate wave 4. I believe we're here. Maybe 2 days early, but the discussion I've been having, particularly here in the S&P, was that the market was ripe for, but I felt it could hold out till Friday, to be honest with you. So, okay, 2 days off. But I'm thinking we could hold till Friday, and then it's just through just expiration, a lot just comes off. And then we get the reaction of what we got today, intraday. But then it's really kind of maybe starting on Sunday. Because again, remember what I talked about, a couple of things. We had a volatility expiration this morning. So that was the VIX. The VIX and the VIX options expired. And normally when that happens, you get, like, up to that point, volatility could be somewhat suppressed because there's a lot of gamma that's associated with it, and that's still holding things in place in terms of a price level. When that gets released, normally or often what happens in volatility, it gets a pop. So it pops higher. And that's what we got. But then we got part 2, which was the equity markets reacting to put walls, volatility triggers, call walls, everything just kind of like going bam, 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 sort of like, yeah, it just was like a building that was collapsing and pancaking its way down. And I have to tell you, that's kind of how it felt. Like these support levels, it would go down to a support level, it would hold for like maybe a few seconds to a minute, and then pancake down to the next level, and then and just kept going. And that is not always the easiest thing to trade, but there was a fair amount to do. Again, I think I mentioned that if you're trading a funded account, like an Apex account, Bull and Oxen, some of the other top step trader, those can be more difficult because they have very stringent risk parameters wrapped around that account. And the intraday, the intraminute moves were going from 0 to plus 400 down to minus 500 and back again. So, and that's on a one lot in the NASDAQ. It could get really whippy because things were getting whipped around. Now, having said that, the trading itself, if you can manage your risk, was really good. That's all I'm going to say. It was good. It had its moments, but it was good. All right. Now, back to this. A little bit difficult for me to start to kind of pinpoint where I think a lot of this stuff is going to go because I need to build in. So, but I can bring it down to an hourly chart. I'm just going to show you because if you're trading, I can go 1, 2, 1, 2. So, in one way, I can, if we start to come back up, you can run fibs from that high down to that low, but they're retracements. So you're just going to look for a retracement, and you got 382, 50%, 62%. And above that, then it's likely going to be a little bit different count than maybe what I'm thinking. So right now I'm going with 1, 2, 1, 2. And then this is a third and a 4 and a 5, and then we put another 3 in, and then we put another 4 and a 5, and that puts another 3 in, and then the 4, 5, and that completes the first leg. So it's should stay, at least in this initial move, it should stay pretty volatile because we still have expiration on Friday. And then going into next week, ooh, we're going into Christmas. And with the uncertainty, with everything, it could make for traders to be uncomfortable and look to unwind more. Because on top of that, we have the December 31st, which, as I've been talking and everybody else has been talking, is the JP Morgan collar, that for their big hedge funds, right? That collar sits at 60, the call side of it sits at 60.55 SPX. Well, SPX dropped $178, and not that I think that they did, but I would be smiling because I don't think they got out of the position, that's for sure. But boy, they just made an absolute payback. I don't know what to say. Everything that they put out there as risk got back to them today, and then some. All right, because that expires on the 31st. All right, so here, the best I can say right now is that I think we bounced, but we have additional downside. Where do I think we're going to find support? I think right now support's going to come in. We're past that. Our next line of support is actually 5,800. So I'm sticking with the big numbers right now, but I likely will be running my own fibs inside of all of this. But again, I don't have a lot to give me downside targets other than what I've already established on an intermediate degree. On the minor degree, I could, well, you would run from here up to the top. And then you have, see, we went through 236. So we have 5819. So right, big numbers, 5,800. And then 5710 to 5700, 5618 to 5600. So it's all in there. And that's how you're going to have to play this initial leg down. And it should trade kind of that way as well, because we're starting something new. I can give you outside, and it's going to feel like it's not going to stop in here. But again, as I said in the NASDAQ, I cannot rule out. This took not that long. This was July 11th. This was August 5th. Not that long. So we actually put that top in on December the 11th. So is this going to go that quickly? And then like January, the beginning of January? The 6th is the Monday. So we have the 1st, and then I believe the market trades on the 2nd and the 3rd. And then we have the weekend. So on the 2nd and the 3rd, does this thing bottom and giving us that same time frame? Well, there's our targets. I know I'll widen them out a little bit as we can pull additional levels. But right now, what we have is the fibs. The 382 is 52.72. The bottom of the wave 4 is 52.46. There's your first cluster. Nice ride. All right, I could continue to talk, and I'm just realizing I've probably been on for way too long. Tomorrow, let's take a look at what may be coming in. We have initial jobless claims, GDP, Philly Fed, manufacturing, existing homes, and U.S. leading economic indicators between 8:30 a.m. and 10 a.m. And the next update will be on Thursday, December the 19th.